Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Friday, October 10th. The euro fell approximately 90 pips during the Asian session as S&P futures declined sharply after Thursday's equity sell-off. The pair recovered those losses during the European trading but declined further in New York as the Dow and S&P declined. The euro can be seen trading in a descending channel here, hitting lows not seen since June of 2007. Major areas of support can be seen at 1.3260 and after that 1.2870. Currently, resistance is seen at 1.3440 and 1.3785. This evening, ECB President Trichet will be speaking after the G7 meeting with other central banks in Washington, D.C. The pound continued to tumble during the overnight session as the uncertainty regarding the UK financial system deepens. The pair fell as much as 300 pips but managed to find a bottom near the LFB S2 at 1.6845. The pair rose from there but declined in New York as risk aversion took hold. The pound has found intermediate support at 1.6770 and resistance at 1.7216. These areas match up nicely with the Fibonacci retracement levels. The Aussie continued the moves that were started late in the U.S. session on Thursday and fell 230 pips during the overnight session. Once in New York, the pair continued its decline and is on a track to lose about 1,300 pips for the week. The Aussie caught a bid in the afternoon trading, ending the week off lows not seen since August of 2003. The pair has lost almost 30% in the past 3 months and moving an unprecedented 1,380 pips this week alone. The CAD moved higher again during the overnight session as crude futures continued their retreat. The pair has appreciated 11 days in a row, gaining 1,300 pips in the process. In economic news, employment increased by 107,000, which was more than expected, but the large increase was due in part to part-time workers, which increased by 97,000. The unemployment rate remained stable in September, despite analysts forecasting a small increase. Over the first 9 months of 2008, employment has increased 1.1% or 194,000. This is a slower pace of growth compared with 1.7% and 275,000 during the same period last year. The amount of movement seen in the loonie this week has never before been seen on data going back to 1979. The pair broke through resistance at 1.1890 but was quickly rejected. The Swissy fell 115 pips during the European session, breaking below the LFB S1 at 1.1220. During the Asian session, the Swissy tried to break lower but failed to test at the first support area. The pair has posted gains for 4 days as global equity markets declined and the trend was continued in New York as the Dow and S&P posted steep losses on the day. The yen fell 180 pips at the beginning of the Asian session as S&P futures declined nearly 3%. During the overnight session, the yen retraced some parts of the move and moved between the Asian session open price and the LFB S1 at 98.65. Once in New York, the pair surprisingly held steady even after the S&P headed to its largest weekly loss on record. The yen has tested many levels of support and resistance this week. The pair can be seen here with resistance at 102.70 and 103.80 while 100 and 98.50 have held as support. In Asian equities, the Nikkei index dropped 881 points or 9.6% to close at 8276. This is the lowest level seen since May of 2003. The Asian benchmark lost 24% of its value this week. In Hong Kong, the Hang Seng plunged 7.2%, and in Australia, the S&P ASX ended down 8.3% in its biggest one-day percentage loss ever. In European stocks, the German DAX fell 342 points or 7% to close at 4544. And the UK FTSE index fell 381 points or 8.85% to close at 3932. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 8451 after losing 128 points or 1.49%. The S&P closed at 899 down 10 points or 1.18%, while the Nasdaq finished trading at 1649 with a gain of 4 points or 0.27%. Crude oil for December delivery finished trading down $6.20 or 7.15% to $80 per barrel. Gold for November delivery declined $37 or 4.25% to close at $845 an ounce. In Treasuries, the yield on the 10-year note rose 9.5 basis points to 3.874%, while the 2-year note's yield rose 11.6 basis points to 1.642%. Overall, the financial crisis now enveloping world markets has frustrated leaders talking about taking some radical steps, in part because to this point every measure that has been taken to calm the markets, including an unprecedented coordination of central bank policy, has failed. Stocks in Europe and Japan staged the steepest weekly tumble in at least 21 years. Drops in Brazil and India pushed the MSCI Emerging Markets Index to its worst week ever. Oil fell as much as 9.2% to $78, and copper was poised for its largest weekly decrease in 2 decades, and more than $25 trillion of global market capitalization has evaporated in 2008. To this end, the Italian Prime Minister has said political leaders are discussing the idea of closing the world's financial markets while they rewrite the rules of international finance, stating that the idea of suspending the markets for the time it takes to rewrite the rules is being discussed. It can't just be for one country or even just for Europe, but globally. The Prime Minister didn't give any details on what kind of rules the leaders were looking to change, except to say that they are talking about a new Bretton Woods. In economic news, the trade deficit declined 3.5% in August, as both imports and exports declined. The smaller deficit will allow economists to up their estimates of third quarter GDP, which prior to the trade numbers was for a 0.2% contraction on an annualized basis. The decline in exports was the first in 5 months, but the amount of exports was still the second highest on record. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.